Hey guys, Mike here. So, oh boy, what a day in the market. And this was the buy the rumor, sell the news event, right? Because if you didn't hear, CPI came out right in line, right? And we're going to get into that. We're going to talk about three things that you might have missed today that contributed to the sell-off. Actually, four things once we hit the charts. And then a lot of stuff in the charts you don't want to miss on this. And then I'm going to show you a little interview at the end from the gentleman I like to hear from, who talks about, he manages a volatility index, and so it's always good to hear from him because he's like an options expert of what he's expecting, okay? And I think you definitely want to hear it. So obviously, let's look at this. So headline CPI comes in, big drop, right? You can see at the top, you got headline CPI here, month over month, nice drop right there. But then we get down to core right beneath it, and this is the less food and energy, okay? And you can see when you take out food and energy, first of all, it had been rising. You get a little dip, but boy, it is sticky. Okay, this is the sticky stuff. Okay, this is where it's like 40% of housing and things like that. And so that's something to keep in mind. Because now headline CPI is actually below core CPI. Now, what's the single most important problem for small businesses? What does it happen to be? Inflation. And shockingly, it's not labor or anything. It's actually inflation, and then it's the quality of labor, right? And I think I talked about that last week. So inflation is still a big problem for the small companies, okay? Now, when all is said and done, when it comes to whether or not the Fed is going to raise rates, it really didn't do anything. It's at 72%. I believe it was 69% 2 days ago when I showed you this, for a 25 basis point hike in May, because there's no meeting this month. Now, here's the things that are contributing to the sell-off most likely. Fed minutes came out at 2 o'clock, and this is what they said. Given their assessment of the potential economic effects of the recent banking sector developments, the staff's projection at the same time of the March meeting included a mild recession starting later this year with a recovery over the subsequent 2 years. Real GDP growth in 2024 is projected to remain below the staff's estimate of potential output growth, and then GDP growth in 2025 was expected to be above that potential. And so that is one of the almost 5 things now I'm going to add to you on this. But the other one was this morning, because remember in pre-market we were roaring, right? 1% or whatever up on all the indexes, and then it sold off like 5 minutes in. But this is what Warren Buffett had to say as well, and people tend to listen to Warren Buffett. And listen to what he says about what's going on with the banks and what he sees happening.
You're saying on one hand, okay, no depositor is going to lose money. On the other hand, you're saying we're not through the bank failures.
Banks can go bust, but depositors aren't going to be hurt. I mean, banks can go bust. I mean, the Continental Illinois Bank was thought to be impregnable, back many years ago, and the Franklin National Bank, the Bank of the Commonwealth, and sometimes they go broke because they make too many dumb loans, and sometimes it's because they mismatch.
And he actually said that twice in the interview, one at the beginning and then one mid. She was like, wait a minute, so you're saying? And I think it kind of surprised people that he said that. The other thing is this right here. Money continues to flow out of equities and bonds and into money market funds. You can see 1, 2, 3, 4 weeks in a row, the biggest winners, right? And you see bonds, equities, not so much, right? Because again, if you can pull 5% risk-free, and especially in this environment, that is a win-win. I'm telling you what, okay? Now, you also got to think about this as a side note. Look at the participation rate. This came out yesterday. From 25 to 54, right? Look where it's at. It has gone up quite a bit. Now remember, more people come in the labor market, right? That means that more opening jobs come down. What does that do to the unemployment rate? Is that what the Fed wants, or does the job market continue to stay hot? It's going to make the job market even hotter, right? And so why are these people coming back? I don't know if they're running out of money, if they finally found a job they want. Not really sure. Let me know in the comments what you think about that. And if you get anything out of this, guys, please hit that like and subscribe button. I really appreciate it. And if you're new, think about subscribing. If you like this content, I really appreciate your support. Now, the fourth one is simply profit taking, right? I showed you, what I show you? Apple and Microsoft and all these stocks that have been holding up the indices, right? People up big in these stocks. They've run them up like crazy. And what do, they sell it into the news, right? Because I know a lot of people are going to try to be pouring in on the good news. CPI, it's great, woo! And all of a sudden, boom, big boys say, I'm out of here. That's what they usually do because they can get out of those big positions, right? Because they're up big. Why not? Okay, and then we talked about what? The shorts the other day, right? People loading up on shorts for a reason, right? And so that's what happens. And then somebody said in the comments that it makes no sense that people are shorting because why isn't the market like going down rapidly? It's not how it works. You got to remember, one, they use dark pools, so it don't really affect the prices. Two, they don't just come out in one day and just load up on shorts. It gradually does it. Why do you think we've been stuck in this range forever, right? They just gradually keep doing it, adding up those shorts. And then, usually on days like today or maybe earnings or whatever, tends to play out for them pretty well, right? So you guys think and understand the reason why it's not going down very fast when they're trying to short like that, because dip buyers. People keep buying it up. Dip, right? And so that's, I would think about it more like, why is it going down? Why is it not going down fast versus, how about this? Why is it not breaking out? That's the other way you got to look at it. Because they're shorting, right? And they're just gradually doing it until they accumulate enough. And then here comes the big event. So I would think about it like that instead. Now, we're going to get to the fifth one in a minute when we hit the charts. But here's the sectors. You can tell it was kind of a blah day for everybody. But obviously, a lot of big ones down. Consumer discretion got destroyed today. Tech, communication services, even utilities was slightly down. You had energy a little bit up, healthcare basically flat. It was actually doing really good in the early morning. And then industrials 0.3, materials 0.1. Some more defensive stuff doing better than obviously the risky stuff, right? And so here's the fifth one for you. The double top, that's what happened. As soon as we broke above that trend line, which is a brick wall, it hit that level around like 411.70 or whatever it was. Boom, rejects down, tries to come back up, hits that trend line, which again, that descending trend line, which is just a brick wall, and completely rejects off and sells off. Okay, and so that's the fifth one. Again, we'll see if this plays out or not. This is an hourly time frame. So we'll get to see, again, there's a lot of demand right below it. Just saved it many times, and below that's even more demand. Now, that leads us to this right here, and you can see this is what they're talking about earnings. Now remember, the Fed just said they expect a recession probably later on in the year, right? And then 2024 and 2025 is going to recover. Well, where are the earnings projected? The biggest losing quarters are the quarter we're in now. I'm sorry, actually the first quarter, we're reporting, and then the second quarter, which we're in now, right? And then they're expecting everything to start picking up third, fourth, and then first quarter of 2024. Because remember, a market does not bottom before recession or after recession. It has bottomed in the basically throughout history in the middle of the recession, somewhere in the recession. Okay, so keep that in mind about the market. The economy does not. Okay, the market usually bottoms when everything is at its worst and you don't think it's going to recover. Which again, is October the bottom? We ain't in a recession. We don't know. But again, if a mild or moderate recession takes place, that's usually when you're going to get your bottom. Now, Tesla, I told you we were watching this hard yesterday. There's that trend line again. Boom, sells off, goes through anchored VWAPs. Again, there's the savior. 180, 181 area. It just keeps saving it, okay? And so, again, you look at this, and this is on a short time frame, so you can actually see what happened. Looking on the daily, though, obviously your RSI is below the 50. The MACD doesn't look very hot. But that, and again, this will also bring into effect, if this keeps going on, don't forget that gap down below. Again, still got to get through 180, 181. We'll see. Still has some support lines below that before you even get to that. But more importantly, I want you to look at the weekly. And this is a big one to watch out for. This is the 200 weekly moving average. You can see it touched it down there today, right? And so it's broke through this before, going back in March, and was able to recover. But the previous time before that is when it actually broke and then fell to 100. Of course, there was a lot of stuff going on in the market then. So, but again, that is a big moving average to watch, okay? And I don't know if this is what's happening or not, but Tesla cuts prices again. This came out last night, happening in Hong Kong. You can see, I mean, that's almost double digit for some of them, price cuts. And so this has people worried about the margins and the demand, because like the grocery stores, why can grocery stores continue to raise prices? Why do they continue to do that? Because of demand. We got to eat. They know we got to buy. So they don't care. They're like, I'm going to keep raising over what inflation is costing them, okay? I know somebody was talking about Costco in the comments. That's just what they're doing, okay? Because they know they can. So people are worried, you know, oh my God, is the demand slowing? And that's why they keep doing these cost cuts, right? Not just here in America, but across the world. So, you know, that's something, maybe have the bigger investor spooked, and we'll have to see. We won't know until the numbers come out for them. They start reporting and stuff. So just keep that in mind, and that could be what's weighing on it, right? Now, the other one is NVIDIA. All right, this is the hourly chart. What do you see happening right there? The head and shoulders. We talked about this before, I believe, and it's right there at the neckline. Is this going to play out? We'll have to see. Going to have to break the neckline first, right? So we'll see if this plays out. If it breaks it and plays out, then boom. NVIDIA, which has been super hot, obviously, and way overbought, which I've been talking about for weeks, you know, can go down. But it was really the semiconductors as a whole, every one of them were red today. And so, we'll see what happens on that one. Meta, you look at this right here. Again, it was 0.07 green. It's the same thing. I showed you. Look at this. It was 4 trading days yesterday. Now it's 5 trading days. Just sitting right there, flat as can be, being held right there. And are they going to move it up to this gap? We'll have to see. 16% away from it. And that is an enormous gap. All right. This is at basically the mercy of big money. Now, if you're in BABA, that's down huge because SoftBank came out today and so they're going to try to sell the rest of their position. And what I read, they got a big position in BABA. So something to keep in mind. I know it's down on the day and it was also down after this news came out and stuff. So it's never good when your biggest investor is selling a stake. So keep that in mind there. It might be a buying opportunity if you've been waiting to get in, or if you're up big and you think it's going to drive it down, make your decision on that one. So again, it still has that on the weekly, the inverse head and shoulders set to play out and stuff. And then I know China is, they're stimulating their economy. They don't care about nothing. They're putting money out there, right? Trying to turn things around. So another thing that might have also, I forgot about this, may have spooked semiconductors. I know China shut down temporarily airspace. Thank you. That's what I was trying to think of. Airspace over Taiwan temporarily. I don't know why they did that one, but they did. And so that may have something to do with it because obviously Taiwan Semiconductors, biggest one of them all. And so that could have something to do with it. Now, before I get to the stuff we got going on tomorrow, which is huge, the gentleman we're always talking about, who runs the volatility index, this is what he thinks the Fed is going to do. So far, he's been pretty right on with it.
5.25 to the ultimate terminal rate. What is the biggest new issue on your radar screen?
The Fed will have to take the wealth effect out of the market. They're going to have to come back and start talking the market back down. They're going to have to start taking yields back up that have been overdone on the back end of the curve. So I'd expect that from the Fed as we look forward to early May and the Fed meeting coming.
And I look forward to continually hearing from the CBO about how big our current fiscal deficit is compared to 2022. It's like 400 billion higher. Stop spending if you want inflation to go down.
And I think he's right on because, don't forget, this whole thing, this move up, wasn't something the Fed had planned, right? They didn't plan on injecting, 300 to 400 billion and raising their balance sheet back up into the banks, okay? And they made, I'm sure they knew the market was going to react how it did because it ain't quantitative tightening, it is QE, and their balance sheet's been slowly coming down, right? And so that's something to keep in mind there as well. But yeah, they can't let the market start running crazy and stuff if, in a way, I don't think they can say it, but I really do believe they want a recession. Let me know in the comments what you think. I think they do want a recession. I think it's the only way they can tame actual, especially core inflation. It's the only way they can get the businesses to stop raising prices over what it's actually costing them for inflation, called greed inflation, which is absolutely taking place for things they know we need. You don't have to go buy a car, you don't have to go buy a fancy house or anything, but you got to eat. Okay, and so that's something to keep in mind there. And obviously tomorrow, hey, more inflation stuff, right? First, we're going to have all the jobless claims, the initial jobless claims. Don't think we're not looking out for that. Is the job market continuing to soften or not? PPI, month over month and year over year. This is something the Fed loves to look at. And they're expecting a big drop for core PPI year over year from 4.4 to 3.3, month over month 0.2 forecast. And so this is something they're going to be taking a look at for you natural gas folks. You're going to have some information on natural gas. Again, that one's all over the place right now. They call it the Widowmaker for a reason. I know we have people in the membership that are trying to find the bottom on that one because you can obviously make a boatload of money on it. You can also lose a boatload of money because it'll go up 30% one day and drop 30% in one day. So keep that in mind. And we will have all that information out before pre-market. Again, what happened today? Up 1%, fell off a cliff right there in the morning. Again, a lot of profit taken. We'll see what happens tomorrow. We've seen this movie and everything, and we've seen big sell-off. This wasn't even a big sell-off as far as the exchanges, but and then you bounce back the next day. The dip, and what we got to answer is, are the dip buyers going to come in? This is what to watch out for with this news here, because remember I told you at some point in time, maybe not be now, but eventually news ain't really going to matter anymore. It will shift over to actual earnings and fundamentals, and they realize, oh my God. And then it goes away. Or there's going to be this deal, and we won't know this for months. Is the Fed going to cut? All right, that's again, all these different scenarios, but that's what's playing out, all this different stuff. Because remember what anybody tells you, nobody, and I mean nobody, unless you are 66 years old or older, has seen this kind of market, right? We have never had this kind of inflation going on since the 70s, which I don't remember. Maybe you do. And we hadn't had people in the market, the people running these funds, the people actually managing their own accounts, have to deal with this kind of stuff on top of a hot labor market we've never seen before because we never shut down the world, right? And then all these other scenarios that are playing out. So just keep that in mind, guys, as we go forward here. Pay attention to how the market is paying attention to this, because again, this was good news. This was in line with expectations, and you still got the sell-off, right? But remember, we were coming up into, and that's why I was saying when I was talking about the shorts, it was the perfect scenario because you had all these major stocks that are holding up the indexes, and why it's terrible for 10 stocks to be holding up indexes, because it only takes half of them to sell off to get red days, right? And they're all just sitting at these major resistance or just overstretched, right? And so anyway, that's where we're at, guys. Hit the like and subscribe button. Let me know what you think in the comments, and I will see you guys tomorrow.